Hey guys, welcome back to another video. Today I want to discuss my framework that I've used in prior bear markets to sort of determine when are the best times to buy Bitcoin. And this is going to be quite a different video and will be more so focused on longer term timeframes and speculation on what I think might happen, say 2026, or what the subsequent year after Bitcoin's top has been, decisively put in would potentially look like. And obviously no one knows what the exact bottom is or was until, months/years later. Hindsight is 2020, but it has historically been much easier to time market cycle bottoms than it has to time market cycle tops, right? So today we're going to go through some indicators that have nailed, prior bear market lows and what we can learn from them going forward, and perhaps speculating on what Bitcoin's 2026 bear market low could look like. And that's just what I think is going to happen. I think Bitcoin will be in a bear market in 2026, at least early stage bear market, right? So before we get into the charts, this is just a disclaimer that many of these data points can change from now to, whatever the actual future low may look like 1 to 2 years from now, if any, and that it's always best to buy Bitcoin, and hold it for 5 to 10 plus years. This is where, generally most of the gains are had, and waiting for a bottom that may not occur could potentially, give you the opposite outcome, that you might have wanted. But another point is that we don't fully know how these newer institutions will react during bear markets. So we'll also look at ETF and institutional on-chain cost basis, the average basically acquisition price for coins that moved into custody wallets that we can track on the Bitcoin blockchain. And some of this data is new data, right, that we didn't have in prior cycles. And I want to be clear about my own bias here. So my base case is that I'm still cautiously optimistic as long as we hold above 103K, the MVRV mean, or whatever you want to look at, the 50-week moving average on a weekly closing basis. I still think the bull market is intact as we head into a seasonally bullish Q4 for risk assets. And this video is more so preparing about what's going to come after this cycle peaks, whenever that is, or if it's already in, which is a view that does, have evidence building for it. So let's jump into the charts. So Bitcoin bear market lows have consistently occurred approximately 12 to 15 months after the cycle top. So in 2013, 2015, we saw the top at around December 2013. It was around 1,200 or so. And the bottom was in January 2015 at like around 150. And the time from the top to the bottom was around 13 months, 406 days, with a drawdown of around negative 84%. And in 2017 cycle, we saw the top in December 2017 at around $20,000. The bottom was in December 2018 at around 3,300. And the time from top to bottom was 12 months, 365 days, with a drawdown of negative 83%. And in 2018, 2021, we saw the top in November of 2021 at around 69K, and the bottom in around November 2022 at around 15,000. And the time from top to bottom was approximately 13 months, 376 days, with a drawdown of negative 76%. So the pattern here is oddly consistent, right? 12 to 13 months from top to bottom, with drawdowns in say the 70 to 85% range. If you can also look at the 2009 to 2011 cycle, which was only 163 days from top to bottom, with a negative 93% drawdown here. Now, if this cycle were to top in say late 2025, early 2026, this historical pattern at least would suggest a bottom somewhere in Q4 2026 or in Q1 2027. But, let's not get ahead of ourselves. We need to look at, more of the topping. We need to see weekly closes below MVRV mean, in my opinion, still. But what's more important is when these bottoms occur, not necessarily when they occur, but how to identify them, right? So when they do occur, that's when the on-chain metrics sort of come in and help us, time these things. So this is just from a timing, seasonal based perspective. But now I want to look into some of the more on-chain metrics. So this is the on-chain risk composite metric. This is a single 0 to 1 reading that takes basically 10 different on-chain metrics into one comprehensive risk indicator. So instead of looking at 10 different charts and trying to, interpret them all separately, this does pretty much the heavy lifting for you. And so when we go into these bluer regions here, the 0 to 20, that's very low risk, right? So we're seeing extreme fear, capitulation with all buyers throughout Bitcoin. This is where, generational opportunities have occurred historically, and generational bottoms have formed for Bitcoin. And so in the 20 to 40% region, we see lower risk, bear market conditions, still accumulation zones, of course. When we start to reach these greener, regions, that's still neutral fair value, sort of balanced conditions on chain. When we start to head up into these orange, yellowish regions here, that's sort of the bull market starting to heat up. Caution should be advised. And so finally, in the 80 to 100 region, that's, very high risk, euphoric, extreme greed territories. And so currently we're sitting at around 0.66 on this region. So we're in a high risk territory, but obviously definitely not in these lower bottoms that we've seen historically. And so another thing I want to mention on this chart is these statistical bands. So these show standard deviations with the actual data set of the on-chain risk metric. And so when the risk crosses below into the -1 standard deviation, that's been a phenomenal buy signal historically. Well, we're currently well above that right now. We're not even within the average or the mean standard deviation of this metric. We're in the middle between, this +1 and the average. So for a 2026 bottom scenario, based on, historical patterns, I would expect this metric just to drop into this, 10 to 0 to 0 to 20 level here, into these blue levels. And so that would signal extreme fear and capitulation, exactly what you'd want to see at bottoms. And so the next metric I want to show here is the NUPL by cohort risk. And so this goes deeper into sort of market sentiment. And so we're looking at net unrealized profit and loss across different holder cohorts. And so NUPL basically measures the difference between unrealized profit and unrealized loss as a percentage of Bitcoin's market cap. So it's essentially asking, are most holders either sitting on gains or sitting on losses right now on an unrealized basis? So this metric actually combines 5 different calculations. So we're looking at the overall NUPL, short-term holder NUPL, long-term holder NUPL, AVIV NUPL, and the long-term holder profit to volatility ratio. And these are all individually accessible on the website if you want to look at them. But this is combining all of them, right? So we can see here that there are different phases in this metric. So we have max pain, capitulation, fear, optimism, greed, and euphoria. In max pain, that's historically when extreme capitulation has occurred. Everyone's underwater. There is panic selling occurring. Capitulation in aqua, that's starting to see some sort of bear market either formation or the transition from bear market to seeing more profitability in the system. And then we see fear/hope in green. That's more so early recovery phases. So we're moving from people moving from red to green in terms of their portfolios. And then we have optimism. I like to think about it as mid-cycle momentum. So you can sometimes get drops into these regions as the bull market is still in the way or ongoing, right? And then subsequently go back to these higher levels here. And then greed is basically a strong bull market. We've seen this on the way up from around 27K all the way up to 38K, and then subsequently seeing the euphoric zones, which is the market starts to be overheated, everyone's profitable, and that's a potential top risk, right? So if we look at the major bottoms, right, in 2015, 2011, 2018, and 2022, all coincided to being in max pain territory below, negative 25% in the combined risk. That's where long-term holders were sitting on massive losses. Everyone essentially was, right? So major bottoms tend to occur even when long-term holders are significantly underwater and not just newer buyers. So everyone's hurting, the entire market is, right? So currently sitting around a combined risk score of 0.57, which is in the green or greed phase. So most holders are still profitable, but short-term holders are underwater, like we talked about in the last video, and long-term holders have still been distributing and sitting on substantial gains, right? Those are the people who bought these bear market lows and who have been holding all the way up here and finally started to distribute some Bitcoin here. So let's talk about the actual selling behavior and not just unrealized profit and loss, right? So this chart measures basically profit and loss motivated selling pressure by transforming what we call the SOPR, which is the spend output profit ratio, into a percentage based pressure metric, right? So standard SOPR is telling you if the ratio, it's telling you whether the ratio of selling to acquisition price for that wallet is either in loss or in profit, right? So whatever they bought their Bitcoin at and whatever it left their wallet at, right? If the SOPR is 1.5, people are selling at or they're moving their coins out of their wallet at 50% profit, right? If SOPR is 0.8, they're moving their coins at a 20% loss out of their wallet, right? So this chart goes a bit further and sort of separates the profit pressure, so the positive SOPR values from the negative SOPR values, which is loss pressure in this case. And what we're doing here is just looking at it from a long-term perspective or a short-term holder perspective. So if long-term holder SOPR is 0.7, that means they're selling at a 30% loss, and the long-term holder profit pressure would show 30%, right? So I specifically want to focus on the long-term holder profit pressure with a 30-day exponential moving average. This helps to basically smooth out the daily noise and shows us where sustained selling pressure might be occurring, right? And so the pattern on this chart is pretty clear. When long-term holder loss pressure sustains elevated levels above 15 to 20%, sometimes going all the way up to 50%, and start to sell at a loss, that's typically when you see bear market bottoms tend to occur. And so when long-term holders are selling at losses, it shows up very nicely on this chart because it's quite rare to see them selling at loss. And so right now, long-term holder profit pressure is actually essentially at zero. Long-term holders are not selling at a loss at all right now, just because of the fact that a majority of them have acquired at prices much lower than what we already are at, or they're slowing selling, right? So, or they're selling at profits, right? So they're not losing any money, right? Another metric I want to look at is the realized profit and loss Sharpe ratio. And so the Sharpe ratio in traditional finance measures risk-adjusted returns, basically how much you're getting per unit of risk taken. In traditional finance, a Sharpe ratio above 1 is considered really good. Above 2 is exceptional. And so this chart applies basically that same traditional Sharpe ratio calculation, but we're looking at Bitcoin's realized profit and loss across different holder cohorts. So we can look at it from a younger 1 day to 7 day, medium 7 day to 6 months, old 6 months to 3 years. So you can typically see when these holders are taking profit and what their actual realized Sharpe ratio was. And we can also look at it from a lot of other metrics here or cohorts here. So I do want to look at the average because that's taking all of these and just averaging out and looks a bit better here. So I'm using the cumulative calculation, BTC denominated. You can also go choose it from USD denominated. So this ratio is showing that when the average Sharpe ratio is high, so above 1.0, it means Bitcoin holders as a group are generating strong risk-adjusted returns in their portfolios. So overall, the market participants are profitable, right? When the average Sharpe ratio is below 1 or low, negative, it means that risk is basically exceeding returns. Holders are starting to experience losses that don't justify the volatility that they're taking on, right? This happens typically during bear market bottoms and distribution phases. So major market cycle bottoms do coincide with extended periods of negative Sharpe ratios below 1. And then as the bottom starts to form and recover, the Sharpe ratio starts climbing back towards positive territory. And so one thing I like to do is apply a smoothing on this metric to make it a bit more digestible and not as volatile, right? So it's currently sitting at around 4.39, and it is still positive, still decent. So it is a metric that will show you basically when tops are starting to form, when bottoms are starting to form. So we've been relatively overheated throughout this entire cycle here. So something to look at. So when all four of these metrics start to sort of flash simultaneously towards the bottom, that's historically been great accumulation zones, right? So if Bitcoin was to top in Q4 2025 this year or early 2026, and if we were to follow historical patterns and considering, diminishing losses that we've seen from cycle to cycle, as you can see, in the first cycle we saw a loss of around negative 93%. In the second cycle we saw negative 84, negative 83, negative 76. So you can see that these drawdowns are sort of diminishing over time. So based on this 12 to 13 month pattern from top to bottom, a bottom would likely occur in Q4 2026 or Q1 2027. And if the top was in at 126K, let's just say hypothetically it was in at 126K, and we were to drop, let's say, a 60 to 70% drawdown, that would get you around 50 to 55K. And we can also see that a lot of these key on-chain metrics, such as the realized cap and the cumulative value days destroyed, have been a decent indicator for when market cycle bottoms are starting to form. So we saw this in 2018, 2022, 2015, and in the first cycle, of course. So whenever we fall below these key on-chain metrics, that can typically be a historically very good time to accumulate. One of the first things that I would start to look at in order to start accumulating more and more Bitcoin would be the true market mean. That's currently sitting around $82,000. And so if Bitcoin were to get a drop below that level or at that level, that's when I would start to step in and start buying. And you can also see that during the bear markets, these metrics and these on-chain metrics start to sort of roll over here and go negative as well. So you could see that this metric might start to roll over here if Bitcoin was to start to roll over as well. So currently the realized cap is sitting at 56K. The cumulative value destroyed is sitting at 44K. And the true market mean is at around 82K. But again, if Bitcoin continues higher here, these metrics could go up higher with it. And if Bitcoin starts to roll over, then these metrics would start to roll over as well. The one exception to that is the cumulative value days destroyed, which you can see nearly only ever increases, right? So at the top in 2018, this was at $2,000. But by the end of the bear market, this was at $3,000. And you can see the same thing play out in 2021 as well. The metric, the CVDD was at $13,000 when the top was in, around $12,000. And then when the bottom was formed, it had hit around $15,000. So it went up $3,000 more. So right now it's currently at $44,000. If this were to start increasing, let's say up to around $50,000, that 60 to 70% drop you could get would historically align with that $50,000 level, which is a little bit speculative to say the least, but something to look at least. So obviously these levels are just similarities to previous cycles. We could see Bitcoin, divert from this pattern and and drop only 50, 40% from the all-time high. That could also play out, right? So we also have ETFs this cycle. And so we don't know how institutions will behave during a bear market, right? Will they capitulate right like retail, or will they start to accumulate more aggressively? As well as the current macro environment, everything depends on global liquidity, Fed policy, if we have a recession risk. If cash is more abundant due to quantitative easing beginning in December this year, then the bottom could potentially be shallower compared to other cycles. And so MicroStrategy's average cost basis is around 74K. and they hold over 641,000 Bitcoin, which is insane. And Saylor has been pretty clear they're not, they're not selling. But if Bitcoin were to drop below MicroStrategy's average cost basis in a severe bear market, the market would be testing these institutions pretty hard. And can you imagine, the headlines if that were to happen? Say Bitcoin starts dropping below these average ETF cost basis and these institutionals cost basis, you'd probably start to see a lot of FUD and solvency issues start to play out like we saw last cycle. And this is relatively new data that we didn't have in previous cycles, but my suspicion is that institutions will probably hold on better than retail buyers, but probably not as well as long-term Bitcoin veterans. But we'll see. It's something to watch. And so watch these metrics. They're available for free at chartspec.com, and most of these will remain free. I saw someone in the comments confused about that. My sort of base case is still cautiously optimistic for now. As long as we hold above 103K on a weekly close, the MVRV mean, or the 50-week, I think this bull market has some more room to run. We could obviously chop around here for a while before breaking in either direction. But nevertheless, preparing for what happens after the top is sort of how at least you could position yourself for generational wealth. And I think timing the exact top bottom is probably going to be a fool's errand. And creating your own plan for DCing into the market is always a good thing to have. And so all these charts are available for free at chartspec.com. If you found this helpful, give the video a thumbs up, subscribe, and check out our Telegram link in the description below. Thank you guys for watching, and I'll see you in the next one. Bye.